The Biden administration also published its long-anticipated stablecoin report Monday, confirming that the president's working group on financial markets is recommending that U.S. Congress enact a law to treat stablecoin issuers like banks. And joining us now to discuss that report is Timothy Massad, senior fellow at Harvard Kennedy School and former chairman of the CFTC. Hello there, Timothy. Thanks for joining us this morning.
Good morning.
When you read this report, what was your main takeaway?
Well, the first thing I would point out is it does say that stablecoins could be a means for faster, more efficient, more inclusive payments. So that's a good thing. It didn't take, an attitude of stablecoins just have to be regulated. They're not useful in a broader context. So that was good. Number two, as you note, it does call for legislation. I understand why, because we don't have a framework. The question, of course, is what happens in the meantime. It does refer to a Financial Stability Oversight Council review, so that might still happen. But it also talks about all the various authorities that the SEC, the CFTC, the OCC have. So it still could be a little bit of a regulatory scrum here. We're not quite sure. The third thing is, as you note, it says that stablecoin issuers should be limited to insured depository institutions. Now, on the one hand, I understand why they said that, because we do need bank-like prudential regulation, meaning standards on how you invest the reserves, standards on liquidity, capital requirements. I think all that's a good thing. But I do think they missed an opportunity to call for more competition, if you will, in payments. And I think, more competition in payments would be a good thing. That might just be a tactical move on their part. Let's not complicate the ask for legislation at the start.
More competition in payments. Do you mean that it seems that they want banks or bank-like entities to regulate stablecoins and not fintechs like Meta or formerly Facebook, which is proposing Diem, formerly the Libra project?
That's right. I mean, it's twofold. On the one hand, it says you have to be an insured depository institution. And then second, it says we should limit any kind of commercial affiliations. So both those things would be pretty restrictive. Now, my own view is, well, you could at least contemplate what we often call a narrow bank approach, where you have institutions which are doing payments and which are regulated in some ways like banks. But because they don't do the full panoply of services that banks do, they don't make loans, for example, the regulatory framework is a bit different. And that's the kind of thing I guess I would like to see, so that we do have more competition, because you could say that one reason stablecoins have grown so popular is because our payment system is relatively slow. And one contributing factor of that may be that the banking industry hasn't done enough innovation.
Welcome back to the show. It's so good to have your expertise on this report that I don't think a lot of people can make. Good to see you too. I don't think a lot of people can make sense of it. So if I understand correctly, you've been advocating for a while saying that, stablecoins are not securities and should not be regulated like securities. And so in that sense, this report is going in the right direction, right? Because it is closer to stablecoin issuers should be regulated more like payment systems and not like securities, right? But just sort of reading between the lines here, you mentioned that there's like a lot of different agencies involved. Are there like the CFTC, the SEC, did any of these agencies like come out of this report with more or less power relative to one another, or is that not happening?
No, I don't think you can really infer that from the report. I think instead the report describes the authorities that each of them may have, and kind of left it at that. And so, we may still see a little bit of not conflict, but at least a little bit of jousting between the agencies as to who is doing what. Let's hope they coordinate. And I think, that's where a review by the Financial Stability Oversight Council can help, because it can bring a coordinated approach to this. And so, all in all, I think the report is very, very good. It's very clear. It's very concise, as well as being comprehensive. And that's a rare thing in reports like this. It lays out the risks, but then makes, I think, a very clear call for the kinds of standards we need. The question, of course, is how quickly can Congress act?
Yeah, that was actually exactly my question. So I mean, this report is basically calling on Congress to act, but what does that mean? Like, when are we likely to actually see anything in this report become reality? Because Congress, I
Sure.
imagine, also probably has a pretty steep learning curve when it comes to stablecoins. I don't imagine them like just acting on this that quickly, nor do I imagine them making this a priority necessarily. So yeah, like realistically, what does this actually mean?
It's very hard to say. I mean, what I would say is you're seeing more and more people in Congress that are focusing on these issues. And, I think we could see Republicans and Democrats hopefully coming together on this. It's not really a partisan issue. I think people are increasingly realizing, number one, there are some risks here that we should deal with. But number two, there are some opportunities. And we should be encouraging payment innovation. So, we'll just have to see how long it takes.
How do you think that it should go forward? Do you think Congress should just create legislation that acknowledges digital assets as a whole new asset class with a whole new set of rules?
Well, yeah, that's a very good question. Is do you tackle the whole thing or do you just focus on stable coins? I guess I would prefer that they just focus on stable coins in the first instance and then move on to other things. I think it would just take too long to try to do, something bigger than that, as much as I would like to see something bigger. But, we'll see. As I say, I think Congress is getting more educated. More and more people are understanding this, recognizing we need to do something. And, hopefully, the Biden administration will push this forward. I think, having put out this report, I think they're committed to that strategy. So hopefully we will see some movement.
So there's definitely some projects out there, specifically DeFi projects, that have been warning of stablecoin overregulation, right? And do you think there's any danger of that here? Like, what would overregulation look like? What is the wrong kind of regulation, and how likely is that to happen?
Well, again, limiting issuers to just insured depository institutions that have no other commercial affiliations, that some people would say, well, that's going too far, because isn't that just a win for the big banks? Wouldn't it just be JPM coin rather than, say, some of these other things? None of the major issuers today would fit the mold that this report calls for. At the same time, like I said, I think clearly we do need bank-like standards, prudential regulation in this area. So, it's sort of trying to find the right approach there. On the DeFi area, you're right. The report does focus on that. I think that's a very good thing. That's one of the things I think the report contributes that really hadn't been talked about that much, is the amount of activity going on in DeFi protocols in terms of lending. And we really don't have enough transparency about that. It calls for regulation of that. It's not exactly clear what kind of regulation they're envisioning. So, that is something that will have to be developed.
Mm-hmm. Well, we're very interested in what Congress does. And we had a conversation with Congressman Warren Davidson the other day. He seemed to suggest that stablecoins should be regulated based on their asset backing and that they should actually be distinguished. Is that something you might agree with?
Well, if I think one can look at it in terms of, where are the reserves parked? And so you could say, well, as long as the reserves are in bank deposits or in similar kinds of high quality liquid assets, that's a good thing. That's what we want, as opposed to being in riskier assets where you're not sure that the value will be there. So I think that is one of the principal things that we have to think about. And again, it comes back to, should this just be brought within the existing banking sector entirely, or can we imagine kind of a narrow bank concept or a payments charter kind of concept that the OCC at one point explored, where again you allow banks or entities that aren't full service banks, they aren't making loans, but they are doing payments, and they are then subject to a slightly scaled down regulatory model.
Just looking at this report, are there any stablecoins that would be affected differently or would benefit more than others? I mean, looking at the big market cap stablecoins like Tether.
I think they all would be affected by this, right?
Yeah.
I think they all
would any be affected particularly or in any more than any others?
Tether is not an insured depository institution. So, it would have to apply for a charter and be reviewed in that sense. So this would, these would be very, very significant changes to the industry.
Otherwise, you think it could be blocked from being used in the U.S., all these stablecoins, which are global stablecoins used in all over around the world. How can you just make sure that they abide by U.S. regulations when they're not beholden to U.S. regulations, and they exist in other jurisdictions?
Well, you can address the offer and sale of them in the U.S., and that the report notes that. You can even go after the correspondent banking relationships that they have and that they depend on. There's lots of ways of asserting U.S. jurisdiction. So, the recommendations in here are very, very significant and would change the landscape quite a bit if Congress were to adopt them, or if the Financial Stability Oversight Council were to effectively adopt similar standards through its own review.